Okay, it should be streaming live now on YouTube. All right. Well, welcome if it's your first time here. Let me mute this. Okay, if it's your first time, what we're doing is, welcome if it's your goodness gracious. All right. Remote control stopped working on me. Okay, so what we're going to do, what we do in the trading room is trade four markets, the 6E, crude oil, 6E being the euro currency, futures, and the NASDAQ and gold. Okay, these are the four markets that we trade in the trading room. And what we do every Friday is go over all the higher time frames in preparation for next week. Okay, what we're using as far as indicators are concerned, mostly as far as developing areas for trade entry, trade location, we're using market geometry, trend channels, median lines, trend lines, of course, and then to confirm those areas. And this is all across multiple time frames. So we're trading, all the way down to a 2-minute chart. Most of the setups that I mark up, I mark up corrections on, say, a 5-minute chart as well, but most of the corrections that I'm looking for will end up being on the 20-minute, hourly, or 240-minute. And then we try to fine tune those entries on the faster time frames. So market geometry for defining the areas across multiple time frames, requiring a confluence of areas, and then the volume, relative density to confirm supply coming in at a high, demand coming in at a low, and then divergence across the faster time frames, momentum divergence, to confirm that price is actually slowing down into that area. So momentum divergence and volume to confirm the areas that we're defining with market geometry. Okay, so what I want to do, since we're here on the 6E, I guess let's go ahead and start with the 6E. I'm actually short 2 contracts in the NASDAQ right now from the high, today's high. I was short 3 and then I took one off. We'll go over that in a moment. And then I guess I'll go ahead and go over my track record up to this point that I started in November of last year. All right, so this is a weekly chart of the 6E. And we had been thinking that from this high, and then from this high, that maybe we would go down and find one more low before the next big bull market in the euro. We've been coming down for, almost a decade now in what is a massive correction. Okay, so we had a really strong bull market in the euro, almost a decade long, and then we've been correcting for almost a decade. So, at this low, we had, I guess we'd basically been going sideways for about 2 years. Not quite 2 years at this low. Okay, so it came down incredibly hard here, which was to the bottom of this channel, actually. Let me just redraw that. To the bottom of this channel right here. So we had come down to the bottom of that. And then that kind of knocked it sideways into this triangle for about 1.5 years. And then we came down and we did make one more low. So what I'm sure everybody that works with Elliott Wave has been thinking, that questioning whether this is actually the final low, or we're going to come down and make one more low. So what we do with the market geometry is try and determine where those next areas of supply and demand are going to come in. And just by connecting these major swings from the low here to the low here, and then up to this high, which was the most recent major area where supply had come in. So connecting the major area where demand came in, and supply came in, that gives us the median line, lower median line, that's coming in at those lows. So in hindsight, yeah, it's looking like this is the major low. We had been thinking that, well, maybe this is just another ABC backup. In the market geometry, these highs came in perfectly with some major areas, and they did retrace back down, but never down to break the prior low, never down to new lows. And now we're breaking out of that channel. And see, that's a pretty good sign that we're in a third wave now, which would have to be a third of a third. Okay, I don't know if you guys are familiar with Elliott wave at all, but I'm not going to dwell on that too much. But the way it's looking like this is a 1, 2, 1, 2, and now we're in that third of a third. The only thing that we have in the way really is this massive downsloping upper median line from the major swings that we have here. Highest high to the last major area where a ton of supply came in. And then that downsloping upper median line. So let's just see. See, I'm not so sure this is even the proper channel to be using. Let's see. Yeah, I'm thinking not. So I'm really not worried about the one that I just had there. I don't think that's even the right slope. And then the only other thing that we have is a parallel of this channel. So this is the closest low on the weekly chart to the ultimate low, and then a parallel of that from these highs, which is coming in here. It's coming in here at this high, and then at this FOMC meeting high. That's coming in basically right now. So those are about the only things that are in the way, and I don't think that's going to give us too much trouble. What we do have right now, though, and I'll show you that in a second on the 240-minute chart, is a massive churn bar, very high density, very high volume per range coming in right now. So as far as the daily chart is concerned, it's looking like we're getting vertical now, and that's probably going to continue. So this was the last major area that we had in the way. And you can see we've cut right through that. Okay. All right, so yeah, we've closed on the high, pretty much on the high today. So that's the 1440-minute chart. You'll see that I have non-back adjusted continuous contracts, so I'm showing the contracts being spliced together that are not back adjusted. All right, so the previous prices for the previous contracts are the truly traded prices, and that's what I'm using. So this is what I was talking about here on the 240-minute chart. We have a huge churn bar, extreme churn bar, just like we had right here at the low, the final low right here. So, and divergence on the 240-minute chart. So this is probably going to put in some kind of a high in here, and we do have a last set of kind of 5 waves up. It might still be in the third or the fifth, so it could go a little bit higher, but I imagine we'll put in some kind of a swing high. Either it's right here or a little bit higher Sunday night or Monday morning, and then hopefully come down for a couple of days and come back into one of these lower median lines that we'll have defined here. So this is the one we've been kind of riding up and through, and we've finally broken out of it. So that's another pretty strong sign that we're in a third wave, and it's likely going to continue. Okay. As far as the low that we had last night, it was pretty nice. Let me show you. Actually, let me just bring it up in here. That's crude oil. Yeah, this was the area that we had mapped out yesterday. It was to come down right into here, about 1.11 essentially, right in here in the 6E. And then we came right down to that, put in the low. The only problem was I ended up trading gold instead of the 6E because they both had pretty much the same exact setup. Yeah, there it is right there. So it lined up even better on the tick chart. I'm not going to worry about trying to mark all of that up on the tick chart, but you can see it came right down to it. The only problem was it was straight down on the 5-minute chart. So it looked like you were buying, a move that was going to just keep on going. You didn't have any divergence on any of the minute charts. You had, I think, double divergence on one of the faster tick charts, but it looked like a straight line down into that low. And then ever since then, we have been cranking straight up, which you can see here. So I was thinking probably come down a little bit. Maybe that's a little fourth wave there, and that's the end of the fifth, but I'm thinking probably go up a little bit higher before we find that next high that will hopefully give us a much deeper correction that we can get into and get into this next massive move to the upside, because it's looking like the 6E is about to be cruising for several weeks to the upside, I would think, by the looks of that weekly chart. All right, so that is the 6E. Let's go to NASDAQ real quick, because I am short from the highs here. You see how beautiful this is? This is market geometry. How would you know where to trade? How would you know to wait for this area if you didn't use these methods? So this is an hourly chart. All I'm doing is connecting the previous area, the last area where demand came in before the final high, and then to this low where a ton of demand came in. So it's an obvious pretty obvious and spectacular 5-wave move to the downside, and 3 waves back up. It's just textbook. So it is very likely an A, B, and we're looking for 5 waves down. And that's what I'm holding for. And that's, we're talking 500-600 ticks potential here with I think I had a 14 tick stop on this. So let's see. Yeah, I'm tempted to take one off right here. I mean, look at the demand coming in at this low. So this almost looks like a little corrective low here, and that we're going to be going back up. And that's what I'm worried about. I'm worried that, well, maybe this is just a sharp zigzag. And, on the tick chart, this subdivides into a lot of different little waves here. So while it looks like a completely obvious 5 waves to the downside, maybe it's the end of a sharp correction, and this thing is going to stop here and go to new highs. That's what I'm worried about. But I mean, I'm already way in the money. And being that I'm already so far up on this one, I'm just going to go ahead and hold it over the weekend and see if we can't get a gap down. Hopefully on Sunday, we'll keep working lower and then gap down on Monday morning. That's what I'm shooting for anyway. So if that happens, I mean, this is going to be a huge, huge winner here. Let's just see how much where's my entry? Right at the high. I think my stop was at 78.50. But that was with 3 contracts, so it's looking like my average price on 2 of them is at 75.75, but on 3, I think it was 75.25. And we'll see, that's what's so awesome about these methods is you can pinpoint often, not always, but you know what works all the time. I'd love to know if you've figured that out, but the high was 76.50 and I got an average price of 3 ticks from the high, right? 76.50. Yeah, 76.50. And then it did come all the way back and looked like it was going to break to one more high, but then it stopped short. And you can see that here on the 2-minute. Stopped short of making that new high and then just ripped it to the downside. So what I'm thinking is hopefully 1, 2, 3. Kind of like a little ending diagonal for the third of the third there. And then we're going to do a 4th wave like this. Hopefully finish this by the time we close in about 10 minutes. And then start on this 5th wave down Sunday night. And then that'll be like the first wave down of this big move to the downside. That's what I'm shooting for. So we'll see how that works out. But anyway, that would be expecting a break of this low. That would be over $5,000 on 2 contracts and over 500 ticks. So I doubt I'll hold both of those contracts down that far. But I definitely, you know, if it continues lower, then I'll be holding for a break of this low because that's what the pattern suggests. Okay, but this is the issue. We've got a huge selling climax here on the 20-minute and then 2 big churn bars there. If you want to see what that low looks like, this is what that low looked like with the relative volume. Look at that. Massive, massive, biggest extreme churn bar that I think I've ever seen. It's over 1,700%. So that's just about 18 times normal volume. So just a massive amount of volume changing hands right there, obviously showing just incredible demand at that low. And then it rips it to the upside. So hopefully this is one big correction back to the upside. And we got the very end of it there. Okay. So let's go back now and show why this high occurred where it did. We've been talking about this for a while, that NASDAQ and the market should be making a high in here, you know, any day now, as we've been riding the top of this channel where we have these huge channels coming together on the weekly chart. So what I'm doing here is I'm connecting from the 2000, I think it was 2002 Yeah, 2002 low to the 99 high. Actually, I think that was the end of 2000, yeah. 2000 swing high. So 2002 to 2009, and then the parallel from the 2000 high, and that's coming in. We've broken that by a little bit. You see up here. And then I'm connecting the 2009 low to this, I think it's 2016, yeah, low. And then doing the parallel from this swing high here. And that's what we've come up and hit perfectly, right? As well as this channel here. So all of those are intersecting up there. We did have another set that was coming in right here. And we obviously broke that, gapping up here a few weeks ago, a month ago. And then these past couple of ranges on the weekly chart have been narrowing into this high, which means that we've been losing momentum into this high, which you can clearly see on the 240-minute chart. So remember this channel. This is a pretty big channel here. And then we've got a smaller one here on the daily chart that's also coming in right here. And then we have an even smaller one right here on the 240-minute chart. And we came right up to the top of that. The last little wave up here was a perfect 5 waves up, triple divergence in the momentum. So momentum is, basically just going sideways here as we drift up into that final high. And then the big sell-off. And where does it stop at? It stops right on that lower median line of that channel, that same channel that we came up to the high right here and then turned down. And now we've reversed, we've corrected back up into this high, and we're coming down now. So hopefully this next move down will do something like this. I want it to come back into this prior swing low here. So this is the 240-minute chart. I'm wanting it to come down into this prior 4th wave low, because that's typically what 4th waves of one larger degree will do. They'll come back into the end of the 4th wave of one lesser degree. And that's what I think we have going on here. So you can see out of the low here, which was a big 4th wave low, we're looking for 5 more waves up. We have a big 1, 2, smaller 1, 2, and then this big 3rd wave up, which subdivides into 5 pretty nicely. And that's the 4th wave. And there's your 5th. So we're looking for a bigger 4th wave now, which will likely come back into this previous 4th wave. So hopefully break down out of this uptrend channel, maybe even come all the way back to the bottom of this one. Probably not, though. Probably stopping right in here. So when we break this trend line, you'll get a bunch of sell-off, and then it'll, basically the public will be selling off right into the next low that the banks and everybody that knows what's happening will be buying for the next big run up, which will probably just rip it to the upside for a while, probably for another year at least, I would say. So that, well, I don't know about a full year, but that next wave up will likely be a pretty big one. Something similar to this, I would say. So that's what we're looking for in the NASDAQ. And then this would be the perfect spot for the end of this B wave and to see the next big 5 wave impulsive move down to the downside to a new low. And just as far as what the price is at that previous 4th wave, that previous 4th wave low is at 53.47. 53.47. 160.18 would be 53.90, and 200 would be 53.23. The 1-to-1 would be 53.73. So I'm thinking probably not all the way to the end of that previous fourth wave low, but likely down to this area right down in here. I doubt I'll be able to hold the last contract down that far if we do get down that far. But this would be where I would be expecting that next big major low, and that's over 1,000 ticks away. So that would be $10,000 per contract. It's not very often that we get something that looks like this. I mean, you know, NASDAQ has just been screaming to the upside for so long. This is the first big, strong, heavy volume sell-off that we've seen. Look at the relative volume here. Just the average is up around 300%. It's just incredibly unusual. And, you know, you can try to attribute this to some news event or something like that, but the fact is, it has nothing to do with any of that. It just completed a very strong, obvious 5-wave move to the upside, and we're at the top of all of those channels. So, you know, anybody that's managing big money, they're using, at least they're using trend channels. And we're up at the top of a lot of them. So it's just a natural thing for profit to be taken up in the top of these channels. So it's just, you know, a perfect spot to be putting in a temporary swing high. So I'm not saying that this is the all-time high and we're going to be, you know, going down for the next decade. I'm just saying that this is a very likely third wave high. And we'll be doing this fourth wave correction. All right, so that is NASDAQ. Let me see if we have some questions here really quickly. Yeah, sorry, let me make Clint a panelist. Josh a panelist. All right. So let's see. Looks like I've added a number of features to the relative volume. Yeah, no, I don't want to do that right this second, Jordy, but it's still a work in progress. What is a bird wave high? No, third wave high, Richard, sorry. So I'm sure a lot of the vocabulary that I use is going over a lot of people's, you know, Elliott wave is frowned upon by a lot of people, I guess, but it's just an incredibly useful market structure tool, especially on the larger time frames. So this is the Elliott wave principle. The market tends to move in sets of 5 waves for an impulse, for a strong trend, and then sets of 3 waves for corrections. And that's just, you know, you see that all day, every day. You don't always get the analysis right, you know, maybe even a small percentage of the time do you get the analysis right, but when you do, it provides some pretty incredible trade setups. So that's something that I use, especially for the higher time frames. I tend to use it across most of the charts, even if I'm not marking the charts up. I'm thinking in 5s and 3s all the time. But using that in conjunction with the market geometry and then the volume, and of course the momentum divergence, it really just kind of brings all of that together. So even if you're wrong in your Elliott wave analysis, you still see the most important areas where the market is likely to put in a swing high or low just by marking the charts up with the market geometry. So this is probably a little bit more difficult type of analysis to apply, but it's the most accurate thing that you can work with as far as trying to identify future areas of supply and demand, where the market's likely to put in the next major swing high or low. There's really nothing that compares to market geometry for that. And then, putting the structure into some kind of a framework, such as Elliott wave, to identify, sections of the market where you're likely to get the next major correction, because that's what we're looking to trade, are the corrections within the trend. And the trend is a function of whatever time frame you're looking at. So obviously we're in a massive downtrend on the hourly chart. I wouldn't say massive, but we put in a pretty strong 5-wave move to the downside. Let's say on the 20-minute chart. But then on the 5-minute chart, we've been in an uptrend out of this low. On the daily and the weekly, we're obviously in an uptrend. So trend is a function of the time frame that you're trading, and we're trying to put all of it together and build a kind of scenario to a framework for our trading. So that's what this is all about. All right, what are we doing? Let's do gold. Gold is this is the low that I bought yesterday, and then I got stopped out with a break even. I don't know why I keep doing that, but I keep trying to bring my stop to break even too soon. I mean, I had just several ticks from the low, and then once I got that first little pop up, I tried to take it to break even, and then I got basically 2 ticks from the next low, which was a higher low, but I let myself get stopped out. I probably would have exited this morning anyway, had I had been able to stay in that long, but obviously 6E was the correct one to take in hindsight. But I went with the low in gold instead. So what I was thinking was that this was doing a 4th wave low here, just a nice ABC low, and that we were going to be going to a new high. And I was going to wait and see if we would take out this high. And we've done that now, just in the past hour or so, 2 hours, hour and a half. And it's looking very much like, yeah, maybe we're going to go into that 3rd of the 5th tonight. And then, Sunday night, Monday. So probably when we come to the computer Monday morning, we'll likely be somewhere in here and maybe be able to catch that 4th wave of the 5th for that next push up. So let's just start with the weekly. Just an incredible chart here. It's just spectacular. The question is this an A wave down, or is it a completed correction? That's the ultimate question here. It is a 50% retracement from the major lows that we had back in the mid to late 90s. And these are the truly traded prices, so this is not back adjusted data. That's the low that we had in 2008 and 9. And then look at that massive move that we had just after that, when they started printing money like crazy. So I would think most people that are using Elliott wave are expecting a B wave up here and then another C wave down for a much larger correction of this big impulse up here. But the fact remains that this could be the end of it, and maybe we're going into that bull market now. Or, I mean, I'm just speculating here, but I am we do have some pretty obvious defined areas here. And that's what we're going to talk about from this low, because, you know, it looks like we're in a new impulse up. But I'm just kind of speculating here as to what is likely to happen or what might happen. The area that we turned down from here, and this is what we've been talking about the past couple of weeks, every Friday, few weeks. This was where we had the big downtrend line coming in perfectly right there. The median line from the low here to the low here, that's right there. Also the channel of that. So it's the same slope as the big trend line, all coming in right there. It's a 61.8 retracement of the big move down. It's a little over 61.8. And it looks to me like it could be an ABC backup. So we've been kind of wondering, well, you know, is it going to come down and then go ahead and start that next big wave down and finish up the correction sooner rather than later, and then go into that big bull market in gold after that, which would, you know, probably be pretty incredible. Move back up, I mean, the next big bull market, something similar to this big move up out of the next low. All right, or are we going to just go ahead and cut right through these areas and make it up to the next one? So the next major spot is up there around 1500. And I'm leaning, I mean, that's what we were thinking, you know, ever since we made the low here and we started pushing back up, that we're going to do 5 waves up into that, you know, where the median line intersects its channel line. Okay, it's also the upper median line from here. So let me do something. I'm going to do a parallel of this one as well. That one's actually a little bit higher. But if I draw it from this low, see, you've got so many lows in here. It's just kind of a, well, it's an ending diagonal, so naturally it's a bunch of lows. But if I use that one, which is, I think it's lower, slightly lower than this low. If I use this one and bring that channel line back to this high, that's coming in at the same spot. So we've got 1470 there for the next big major area. So if we're going to move up off of this lower median line, which we are already impulsively, it looks like, then that is going to be the spot. And that will likely take 2, 3.5, maybe 4 months to get up there, something like that. So we could be in for, you know, a pretty massive move to the upside. That's over 2,000 ticks. So that's what I'll be watching for in gold. So far we have found support here and we're turning up. Yeah, it looks like a little ABC up, but it could very well be the 1, 2, 1, 2. So, you know, as far as the last move that we've done, the last major swing is a big swing low, and that's the second higher low we've had out of this low. So looking all the way back to here, you know, we've had one big, massive higher low, and then we're starting to make a series of higher lows. So if this is going to be the third of a third, then the next move up is probably going to be pretty fierce and fast. And hopefully that would give some movement in the NASDAQ, the U.S. equities to the downside, if that means the dollar is going to be going down as well. All right. I don't try to worry too much about correlation because sometimes it works and sometimes it doesn't. So But anyway, at this low, we had, quite a bit coming together there. I actually did buy that, and well, at least one guy in the room bought some options down here that I think he's still holding for a break of this high. But I did get the low there, held through the pullback, which was rough, which I think we were talking about last week, actually. Or the week before last, rather. But, I got out in here thinking that this looked like 5 waves down and we were doing a correction back up, or at least 3 waves down, and I was thinking maybe this was a 4th wave. So anyhow, I got out of it, and then of course it screams to the upside the following day. It's also, like I was showing, the lower median line here. It is a bit of a throwover of that area, but not too much, considering it's, a pretty huge channel. Anyway, I've got these little throwover regions to show what the width of the channel is, 10% the width of the channel, which is kind of what we tend to use as the maximum throwover allowed. So this is less than 3 or 4%, I imagine. But anyhow, it threw over this lower median line right into this trend line. So a lot of people are thinking that this is a 1, 2, 1, 2 when it comes to Elliott wave, which would simply mean that we're going into an extended impulse move to the upside, which will likely be pretty strong, but I'm just kind of second guessing that because I think it could still put in a lower high here. So I'll keep an eye on that. But anyway, if it does move up, that's the big area, the next big major area. And you'll be wanting to look for longs, obviously. So as far as, if it is going down, what's that looking like? Well, this is the area that we came up and hit. And was trying to short that, but I was using the low here, and that was just a little bit higher in the median line. The channel is lining up pretty much perfectly right there, but anyway, I missed it. I didn't take it. Because I was actually preferring longs. So I was thinking, well, we'll likely get a reversal down out of this area because it is so just perfect looking, just like the area that I shorted today in the NASDAQ. And it did come down pretty strong, but it did look like an ABC down. And a 4th wave. So I was thinking, well, probably going to get one more move to a new high, but it has yet to do that. And this is a pretty strong area that it's got to get back through. And, look at the amount of volume that came in trying to get back into it, trying to get into it the first time. So a ton of volume came in here. And then once it hit that area, it came down pretty quickly. So I'd say there's still quite a bit of force to the downside here, quite a bit of selling pressure. So if we do come back up into this area, I will likely attempt a short just to see if it is going to get that next big 3rd wave down up in here somewhere, depending on what it looks like, if and when it gets there. But the hourly right now is looking like we have just closed on a churn bar, meaning that it's very high volume per range. We have some supply coming in right there already, and this looks corrective to me. all of these overlapping waves, unless that's a series of, 1, 2, 1, 2. I don't really think it is. I think it's a correction back up. Didn't quite make it to the top of this channel, but of course, if I eliminate that wick, bring it down to that high, we have made it to the top of that channel, and that is a little over 50% retracement. So we might have our high here, but I don't think that I really have much in the way of a strong downsloping area. So anyway, that's what I'm thinking in gold. So let's move on to crude now. This was an incredible swing low here. Let me just kind of go over that for a second, because that was pretty spectacular. Yeah, see, that was the high in the NASDAQ just before the big drop. That was the low in the 6E before the massive move to the upside. Right here. See how perfect that channel was? Just barely missed it because I was busy working on something. It was like 1 o'clock, 1:30 in the afternoon. That was the final high in the NASDAQ just before it happened. Okay, well, maybe it's back here. I'm just going to take another second to look for this. If I can't find it, then I'll draw it up. I think that's the previous low. All right, so let me just show you this real quick. That was this low here, I think, or that one. Anyway, right here, if we're talking about looking for a fourth wave low, you typically connect 1 to 3 and then draw the parallel from, the channel from wave 2. And occasionally the median line will intersect that channel right where the market will find support. Look at that massive amount of relative volume. And it's a big churn bar showing that you obviously have demand coming in right there. And it's a perfect ABC right into that spot. And then what we did is we moved higher. Looks like I'm missing some data right there. Or maybe that's the reopen gap up. Oh, that's the rollover, sorry. And then we get the big selling climax followed by the churn bar right into that median line again. I didn't actually buy that. I was thinking, well, maybe it'll come a little bit lower and do a perfect kind of a channel down into that low. But of course it didn't do that. And it came right to where these two median lines intersected and then turned up. So that was also, 6 in the morning, and we don't get started until 7 in the morning. So I had missed the low anyway, but pretty perfect. So what I'm thinking is that's a fourth wave low, and we're going up and making the fifth wave. And that fifth wave, I'm thinking, is ending right now. So hopefully we'll get a big correction back down out of this. If not, maybe this is going to be a stronger high than I'm suggesting, but right now, let me hide all of this and bring back just the channels. Right now we're at this channel line. Let me delete that one. You see that? That's exactly what I shorted today in the NASDAQ, the same kind of a look. All right, the only difference here is that this is looking like an incredibly strong low that's going to take us to new highs. So when you look at that on the daily and the weekly, that is a pretty serious swing low there. Major high, major high, major low, gives you the next major low. Major high, break through the bottom of the channel and hit the lower median line right where it intersects that channel, that larger channel. And then just, connecting the most recent swing lows together, it's all lining up right there at that low. And we've turned up incredibly strong up and out of that. And we're back into the midline of that upsloping channel now. Okay, so that's coinciding with this channel right there, you see? So this is likely the end of this first move up. Hopefully we'll get a correction back down into, something like this that we could then buy and get that next chunk of that next move up. So we'll likely get, unless it pops right through this, we'll likely get a move down Sunday or Monday and potentially a couple of shorts down. But I imagine we'll be finding some pretty serious support. We just have no idea what this correction is going to look like until it happens. So there's really no sense in speculating on what it's going to look like. But I imagine we'll do some bit of a retracement of this first big push up and out of it. Okay, and then I imagine we'll be going up to new highs. So if we look at the weekly chart, yeah, even a big major spike in the volume on the weekly chart at that low. If we look at the weekly chart, maybe this is the big C wave low. And that's a complete 5 down. But I don't think so. What I think is this. That this is the big wave 1, 2. See how big that second wave is? This chunk of it here? I think this is a perfect 1, 2, 3, 4, 5. And I think wave 4 is going to come up a little higher. And then 5 down. And that's going to be just an incredible low, which will probably come down to the trend line from low to low, which is right now at about 26.42. All right, so if that's the case, if that's what's going to happen, where would it come up to? Well, it would tend to come to the fourth wave of 1 lesser degree. And that would be right here. Typically near the end of it. And this channel line is coming in around 59.65. So maybe between 58 and 60. It's looking like we found some pretty awesome support. And that push up out of that low is not looking to me like it's going to be stopping anytime soon. Yeah, today put in a high maybe and do a retracement. But after that, I'm thinking big push to the upside to finish this fourth wave up in here, as opposed to what we had been thinking potentially that was the end of the fourth wave and that this was somehow a 1, 2, 1, and now we're making a wave 2. It's still possible, but I'm favoring this scenario here. So I'll be looking for that correction back down and likely trying to find that next low to take advantage of what I think is going to be the next big move to the upside. Capiche? Does that make sense? Let me put a median line on that one, actually. Whoops. Yeah, it's intersecting it. Well, it's coming in a little bit higher, so that might be the, kind of the overthrow area if it does go up a little higher beyond that. Josh, I'm just now seeing what you wrote there. Which market were you talking about? So yeah, that's what I'm thinking for crude. I mean, that's, you know, and then the trend line from high to high, that would be kind of a throw over of that. That's coming in at 57.50 right now, but by the time we get there in a couple of weeks, maybe it'll be, you know, closer to 58.5. So that's a pretty strong looking potential there. You say you posted it? Yeah, right. The trend line from low to low came in there perfectly too in NASDAQ. Let's look at that again real quick. So anyway, that's what I'm thinking in crude. Any questions on any of that as far as what we're seeing in crude? And again, we likely have a swing high in here right now just because of this. I'm just curious what that's actually going to turn into. Is this, you know, is this really a big five-way move down? Is this really a big 1, 2, 1, 2? I'm having a hard time with that. That might be the case. You know, who knows? I can't read the future, but all I know is we're at a pretty awesome area for making a swing high, and we've got bearish divergence there. You could count this as a double 3 up instead of an impulse up. You know, whatever. I'm kind of speculating and being a little more subjective than I need to be doing for the sake of this webinar, but we have a pretty incredible area there. And connecting this low, wave 2, to what I think is wave 4, if that's true, let me erase those other ones. I'm probably confusing you guys, but the main thing for you guys is to see the major areas that we have, because this is a major area, so it's very likely to produce a swing high. Okay, you don't have to worry too much about the counting. I'm doing that more for my own kind of analysis here. But if this is a 2 and a 4, then we tend to find wave 5 by doing a parallel from wave 1 and 3. Typically 3, but if 3 is, you know, really extended, which it is a little bit extended here, then I do a parallel from both 1 and 3. And the parallel from 1 is coming in right there. So that's at a little over 51. What is the high today? 50.90. I think it came up a little bit higher. No, it closed right on the high. Huh. That's kind of crazy, isn't it? Closed right on the high. So, you know what I expect will happen? We'll gap up Sunday night. We'll gap up, hit those areas, and then reverse down hard and trap some people in there Sunday night, which is what we tend to do. I mean, we've done that so many times in the euro where we just gap up, make the high, and then turn down. See here, we gap up, make the high, turn down strong. Is that Sunday night? No. Where did we just do that? I think we just did that in gold. Yep, right here. Gap up Sunday night, make the high, and then turn down. So that happens quite a bit. And I wouldn't be surprised to see it happen here in crude. So that's what I'm thinking for crude. And then, right, this trend line from low to low also came in there perfectly. From low to low. So that would be what we would call a kiss goodbye. And if I draw this, let me hide everything else. Turn all this off. If I draw that with a baseline, oh, it breaks the, it breaks it. Let me see. I've got this set up to where it breaks the channel when the 100% warning line is broken. Let me see if I can turn that off here. Yeah, we're still trying to figure out the best way to draw these. They've been redesigned so many times, but I'm going to add the ability to do that, to keep drawing after it's broken. Anyway, what I was trying to show was this. When you draw, let me see if I can do it. I'll do it like this, actually. From high to high. You see that line there? This is what I was trying to show. The kiss goodbye line. So when we break down out of a channel, this is the last upsloping channel on NASDAQ. When we break down out of it, not always, but sometimes we pull back to that channel, hit it, and then roll back down. That's called the kiss goodbye. That's like one of the oldest chart patterns ever talked about. Edwards and McGee wrote about that in their technical analysis of stock trends book, which is, I think it's like the first book you have to read for the chartered market technician exam. So that's like one of the oldest patterns in the book, and that's what happened here rather than the channel. If we just draw the trend line from low to low, we break that with some force and then pull back to it on what appears to be an A, B, C, which of course I had to short that. So my stop just got canceled because the market closed. So first thing, 6 o'clock Sunday night, I'll be putting those back in, and hopefully we will have gapped down. But what I'm thinking we'll do is pull back, finish this fourth wave, and then start heading down again. Hopefully this is not a corrective low. Hopefully this is not just a big ABC, and we get that big push to the downside. All right, so any questions? I think we're pretty much done. Let me see. Did I bore you guys to death, or are you still here? All right, I guess I'll show this track record, and I suppose I need to show a, hang on a second here, a disclaimer. So what I'm going to show you right now is not, it's live results that I could easily have audited if, if that ever needed to happen. Then it's just my account with Ninja Brokerage, which I did with Phillip Capital for the clearing. So I mean, this is me signing into my brokerage. It's not, it's not a sim account. It's a live account. So I'm not really showing you any hypothetical or simulated results. I'm showing you live results. But obviously, it's incredibly difficult to make money trading. It's taken me 10 years. And what a long and painful and just brutal 7 years it was. As far as actually making real money, this is about the first year, because what I was doing before was proving the system in sim, and I did that for almost 2 years. So once I put all this stuff together, I traded it in a simulated account and just had ridiculous astronomical results. So what I did was start with a $5,000 account rather than, 20 or 30 or 50 or whatever, just to show that it's possible to do that with a small account. So I started off with 5. The 16th, I guess I really didn't start trading it until December. Yeah, I didn't. But you can see I was never down below my starting. And then I went through, I think I got up as high as 17.9 or something like that. And then I went into a drawdown and just was adding to losing positions and just doing stupid stuff. Had nothing to do with my system, my methodology. It just user error, basically. I was just making really ridiculous mistakes over and over, and drew it down to below or right at 14,000. And then thankfully this past month, I've gotten back up to my high water mark. So that's 17.3 as of yesterday. And then today I'm up, I think I've already locked in like 300 and something. And then currently I'm up another 800. So I've broken that previous high water mark, and hopefully I'll keep not making mistakes, the stupid mistakes, the ones that, 2 steps forward and 5 steps back, those ones that really just brutalize your account. It's funny how you get into a kind of downward spiral when you start having a couple of few losing trades back to back. It's, the mind is just, sometimes it can be tough to follow a trading plan. So anyway, I just show that just to show you that it is possible, and this is about the best thing that I've ever put together when it comes to analyzing the markets and pinpointing these areas where we're likely to get the next major swing high or low. So that's what we're trying to do. And doing this every Friday is part of getting ready for the next week. So it's analysis that I have to do anyway, so I may as well, no, I have a trading plan, believe me. I just wasn't following it. What am I going to be doing then with Blackbird? So that's going to be on the 22nd, June 22nd. We're getting what I've got with the Divergences Pro to be able to use that inside of Bloodhound is just what we're calling a reader. So it allows me to read the signals from the Divergences Pro from any time frame without having to load that time frame into Bloodhound. Bloodhound is just a tool that we use for basically putting together different rules for a trading system. You know, you could mechanize just a list of rules and have a mechanical system, but from what I can tell, most mechanical systems don't perform very well. So what we're doing with Bloodhound is to mechanize as many rules as we can. Hang on one second. I'm just going to take a drink of water. Okay, sorry. So yeah, mechanize as many rules as we can inside of Bloodhound. And in order to do that, I've been needing this system of signal readers, to be able to access the different time frames without having to load those time frames into Bloodhound. So again, Bloodhound is like a visual programming tool that we can easily build out different rules for a trading system. So when we get all of that done, which will be done, you know, by the middle of June, we'll be able to read the signals in the volume, not only the Divergences Pro, but the volume from all of those different charts and the market geometry from all of those different charts. So we'll be able to automate some of this. I'm not going to say that, you know, I'll be able to have everything fully automated, because that's, you know, it's not the case. Part of what goes into this is my own discretion as far as market structure and direction and stuff like that. So I'll be able to automate some of it, and then, you know, be able to flip the switch to turn the Blackbird on. Blackbird would be the order management system tied into Bloodhound. So we could build the rules out inside of Bloodhound, be able to access all of these different charts, all these different areas inside one instance of Bloodhound, and not slow Ninja down, not slow the computer down by having to load all the time frames and indicators, but, you know, only accessing the signals from those time frames and indicators, which doesn't require much CPU at all. And then inside of Blackbird, use that Bloodhound template to fire the trades and then manage the trades according to a precise set of management rules. So that's what I'm excited about. That just using Blackbird alone will, you know, keep me from making those really horrible mistakes when it comes to trade management. I wouldn't then be able to add to a losing position. The stop would go in automatically. The trade would be managed. The stop would be managed. The targets would be managed automatically. So in the future, that's how we're going to be trading, is letting Blackbird do all of the trade management. Okay. And then we'll be able to do, you know, a higher level of testing and be able to do that testing much more quickly, especially when it comes to, you know, doing all that inside of Market Replay or something. So Blackbird is like a next generation, next level trade management strategy automation tool. And that's what we're going to be doing a webinar on June 22nd. Yeah, it is pretty expensive, you know, but it's there's never been anything programmed quite like Blackbird. The architect of that, Jeremy Tang, he's probably the most gifted programmer that there is in the NinjaTrader, you know, what do we call him? The ecosystem, the NinjaTrader ecosystem. He's got to be the most advanced programmer that there is. And he's quite literally thought of just about everything when it comes to trade management. You know, you can scale in, you can scale out, and then being able to access market geometry from within that is, you know, retail traders have never had access to any anything quite like what we have now with Blackbird and what we're about to have with these tools, our tools, once the programming is finished, which it will be here shortly. So this is, you know, quite literally next generation type stuff. Matter of fact, I'm kind of in talks with a guy that owns a prop trading firm in Utah, Yeah, Utah, Salt Lake City. And I think he has 37 traders or something. And this is what this is what he wants to use. So obviously it's, you know, well, whatever. I'm not going to toot my own horn here. So Richard is asking, how will you be able to see the signals without the chart? Signals, how will you be able to see the signals without the chart? Let me show you real quick. And Jordy, if you're still here, we'll go over the volume here in a second. So I'm pretty much done with the analysis, guys. What I'm going to go over now is just a little bit about the tools that we're using and answer a couple of questions that some of the members have asked, because we're in the process of updating all this stuff right now. So let's say I want to get that divergence signal from the 240-minute chart onto the hourly chart without having to load that 240-minute chart into the hourly chart and without having to load that divergences pro into the hourly chart. What I can do is use Bloodhound, SI Bloodhound. And our reader system to be able to access that divergence signal. So for instance, instead of loading, well, I'll show you in a second. What I would have to do previously would be to load that 240-minute chart into the 60-minute chart inside of Bloodhound, and then have to run it, calculate on bar close false, which is, you know, having to run those calculations on every tick, which begins to slow Ninja down pretty rapidly. So rather than loading the divergences pro, which is a huge amount of calculations, I load this reader, which all it does is access the signals from this chart. So it's just well, it's a pretty high level of programming to be able to do this stuff. It's, you know, it's kind of like a ninja hack kind of a thing to be able to do some of these things. But what we're doing is we're able to access any of these other charts through right here. So if that's a 240-minute chart, I've got two. Okay, there's the 240-minute chart, the continuous. So let's say I want to get that those bearish divergence signals. Any regular divergence setup. You see? And then I can run Bloodhound, calculate on bar close false now, and not slow Ninja down, because we're not really running any calculations. We're just simply accessing the signals from that chart. Disable auto recalculation. Okay, that's something he had to add for this exact reader system. And then I can throttle the incoming tick so that it only calculates, well, we can even just do, we'll do 2 calculations per second, a maximum of 2 calculations per second. So it doesn't ever have the possibility of bogging Ninja down. And then in real time, when we have ticks coming in, we'll be able to access these signals from all these other charts while they're occurring. So the divergences pro is calculating bar close false. Now you get the signal before the bar closes, so that you don't have to wait for that larger time frame to close before you get the signal. And by then price may be way down here by the time that bar closes. If it comes up, puts in a high, and then reverses back down. So we're able to put all of this stuff together in a real-time scenario using multiple timeframes, which has never been possible in Ninja before. So you could never really do proper multiple timeframe system analysis inside of NinjaTrader. Ninja 8 supposedly has fixed all of that, but you could never do it in Ninja 7. So with this new system that we've developed, we'll be able to do that. So you see what I mean? We're reading the signals from these other charts without having to load, without having to load those other charts. And then even more importantly, without having to load the indicator again and have a new instance of the same indicator running the same calculations multiple times. So we do the calculation once on one chart and then access the signals from that chart inside of one instance of Bloodhound. So we would put Bloodhound and Blackbird, or basically Bloodhound inside of Blackbird on one chart, our fastest chart, probably the 2-minute or the tick chart. And then we would access however many other charts that we would want to do. Maybe we only access up to the hourly chart or the 20-minute chart, And then you could have 10 different systems built out for 10 different potential scenarios, and then flip between them on the fly and say, okay, if this one sets up within the next 2-3 hours or whatever, then initiate this trade and this set of trade management rules, et cetera, et cetera. So we'll be able to do, just an incredibly high level of customization, system analysis, and trade management. So it is going to be pretty incredible. So this update will be done by then, and then I'll have a bunch of examples of what I'm talking about right now in a real-time kind of a setting. Well, I guess I'll obviously have to run it in Market Replay to show you how it works during that webinar, and then we'll do countless training sessions. We'll do countless training sessions on putting all this stuff together for the members. So for the volume, Jordy, are you still here? Yeah, Steve, I don't know. I would even say that exits are probably more important than your entry. I mean, your entries still have to be spot on, obviously, and you want to have good entry efficiency, but your exit efficiency is where the money is made. So it's that management that is so critical. Have I heard of XABCD trading? No, I have not, MJ. J Trader saying to read a higher time frame chart, you still need the data, which is a lot of data that Ninja has to process. What do you mean? The chart's already open. I'm already using the chart. I don't know. We've got like 11 workspaces open with 9 charts each. Everything runs fine. The only time it tends to hang up is when I have the ES open. So I just quit trading the ES. This new update, everything is pretty efficient now. The volume is going to be even more efficient when we get through. The diversions has the same thing Bloodhound has, this update interval here, so that it only calculates no more than twice per second. And the thing that slows Ninja down is the queue, the calculation queue. When the calculations start overlapping, Ninja builds a queue to go back and rerun those calculations. And once that queue starts, it can turn into just an exponential mess and cause Ninja to hang up. So if that queue never happens, then the only time Ninja will hang up is maybe for a couple of seconds during a crude report or something like that. So but no, JTrader, it has nothing to do with like bringing in a separate stream of data or something, because we're not bringing in any of those timeframes. So you see that here, I'm accessing the 240-minute chart without having to load the 240-minute chart. So all I'm doing is reading the data series of each bar. So for each bar, it gives a 0, a 1, a -1, a 2, a positive 2, a -2, and that's it. So there's really no calculations involved with this reader. It's lightning fast. I can have 100 instances of these inside a Bloodhound, and it still loads, in less than a half a second. Has there been an update to the full package? No, we're doing that update, Dennis. So right now I'm going to go over the volume a little bit, just to kind of show you where we're at. Give me 1 second, guys. I'm just going to grab some water. I'll be back in 30 seconds. Okay. Is there a way to reduce the Ninja queue for standard indicators as a global Ninja option? No, it has to be programmed into the indicator. We're going to do a universal reader system, though, which, theoretically would work for any indicator, whether it's a Ninja, whatchamacallit, system indicator, or a private DLL from some other vendor or something like that. So theoretically, it should be able to read any of them, but it will at least be able to read any of the NinjaTrader system indicators. Bill is saying the secret is knowing how to code diff pro to provide data series for Bloodhound Reader. Yeah, exactly. So it's just a matter of accessing what is already available. We're not doubling down on the data or anything like that. We're just accessing what is already in a list in a data series. Samir is asking, it would read only public exported methods, right? You mean for the universal reader? I don't know. I think we'll be able to make it to where it'll read anything. At least Ninja's system indicators, the main indicators in your all of these indicators with the @ symbol in your bin custom indicators folder. Should be able to read all of these from any chart without having to load those charts. Theoretically, I mean, that's what we're shooting for. All right, so with the volume, what we've done is there are two sets of indicators, relative indicators, and then the volume and range indicators. We've put all of those into one so that you decide the output, well, the input, yeah, you decide the output that you want on the chart by selecting whichever input for the equations, for the algorithms. So you can have pure, raw volume, relative volume, density, which is volume per range, relative density, true relative density. We're going to probably combine those. Volume per second. Relative volume per second is not an option yet. That's just kind of in there. Range or relative range. So we're finalizing the conditions for each of these now. And then we'll end up getting rid of some of these properties to make it more manageable. So all of that is combined into one, and then we'll be, making it faster and better and building a reader for it and all of that. So trying to make it look a little nicer as well as far as, appearance, visualization. The old one was just a little bit, too much color going on. So this one is more focused on just identifying those bars that have the signals, the climax, the extreme climax. And you can show both the density and the relative volume with one instance of it now, as opposed to having to load it twice previously with the current version that you guys have. So this will load both of them at once, and you can decide whether you want to show them or not. Okay, so all of this will be available here by the middle of June. We'll still have quite a few bugs to work out, and then the other sets of conditions for the range and all of that. Yeah, it's on there, see? Let me reload this. Yeah, see? Extreme churn, extreme density. And then I scroll back and it tells me what the bar is. Churn, high density, relative volume, extreme. This is an extreme spike in the volume, 168%. It's an extreme climax. It's a low, I was gonna say it's a low density climb. This is a low density climax right here, meaning very low volume per range. So there's, yeah, it's a huge amount of volume, but compared to the volume per range of the previous bars, it's actually very low density, meaning that it's low participation back up. So it's probably going to knock it sideways or down. And you see it knocked it sideways for a little while. And then you have a leading climax here to kick off the next move up. A low density leading climax back down, which is a major spike in volume. Pushes it back down. And then another leading climax at the low here. It's actually a selling climax that found a lot of support that came in right there. Knocked it sideways for a little bit and then up. That's a leading climax right there. Leading buying climax to kick off the next trend to the upside. Will the new release be compatible with Ninja 8? No, not yet. Not yet, but the next, probably the first thing to be pushed over to Ninja 8 will be this volume. So we're getting everything working as efficiently as possible with Ninja 7 so that we can use Blackbird and Bloodhound. So once all of this is done by the middle of next month, then the update to Ninja 8 will be started. Already actually started the Divergences Pro for Ninja 8. So half of that is done. And part of the relative volume was done for Ninja 8, so it shouldn't take too long once we get the final layout of everything. So it's, everything is pretty close to the way that I want it permanently. So once that's done here, which will be pretty soon, then we'll push everything to Ninja 8. Yeah, definitely by the end of the year. I'm thinking it shouldn't take more than a couple, maybe 3 months tops, but that's being pretty reasonable, I would say. Hopefully by the end of August. As far as everything, the big one is going to be the toolbar, obviously. That's going to be the most incredible conversion the world has ever seen. But the volume should be pretty straightforward to get pushed over to Ninja 8, and the divergences Pro will require some hacks to figure out, but it shouldn't be too difficult. It's just a matter of finding the new methods and figuring out what's supported, what's not. Some of the methods have been renamed. The drawing objects are different, but we have our own custom drawing. So once that custom drawing method gets converted to Ninja 8, everything else should move along pretty quickly. Richard is saying, does the Blackbird and Bloodhound already work on Ninja 8? No, that's going to take some doing. He'll probably have Blackbird done, I would say a few months, but definitely by the end of the year, he'll have Blackbird done for Ninja 8 and then Bloodhound. He's actually doing Blackbird first for Ninja 8, which is fine by me because probably by then we'll have some of this stuff hard-coded and may not necessarily have to have Bloodhound to use Blackbird, because you can do quite a bit of, condition setting inside of Blackbird. I mean, it's not, if you want a complete system with all of your rules, obviously you would have to have that programmed out in a CS file. I think actually in an indicator file, and then access that indicator via Blackbird. I don't think that you can access another strategy with a strategy. Can you? I don't think so. So anyway, we'll have some of that stuff hard-coded by then, for sure. So at any rate, I don't know of, I mean, I've been wanting to do, this is why I've been selling it. Well, I've had to sell it so that I can pay for the programming. Otherwise, I wouldn't have been able to put together the stuff that I've been wanting to use to trade with. I mean, that's what this is all about, is to be able to afford 2 full-time programmers to build the tools that I've been wanting to use and work with. So it's the design process is, it's pretty intensive, but obviously the design is only part of the process. Figuring out how to program this stuff is oftentimes overwhelming because it is, higher level stuff. So, but it's coming along nicely. So at any rate, it is incredibly expensive, I tell you. But at least I don't have, at least I don't have to pay $150 an hour anymore. I think I've missed some questions. Will the accuracy of BH relative volume be improved? Accuracy of Bloodhound relative volume? Or will we have to wait for relative volume to be built into the relative volume indicator? I don't know what you mean. I think you mean volume divergence. Yeah, that's going to have to come next because that would slow down the release of this. To add volume divergence to this is going to require a hybrid, basically a hybrid of the divergence indicator, the swing algorithm, the swing finder, the swing trend, which is inside of Divergences Pro, and the relative volume. So if I waited to release this for that to be completed, this would never get released. It would take probably another month. I confirmed in the BB webinar this morning that a strategy cannot be accessed by a strategy. Okay, thanks, Bob. Yeah, Bob says you cannot you cannot do that. Strategy cannot. Yeah, so you would have to hard code your rules for whatever you're going to use in an indicator format to still be able to use Blackbird. Yeah, you see the slopes, Samir? So we've got two methods for slope. I may try to improve it a little bit, but it seems to be the same across all time frames. I mean, obviously you can't get, this is rise over run, this is slope, right? But if you set it to the scale of the chart, the minute you do that, the slope changes, or the minute you do that, the slope changes. So it can't be true, rise over run that would be meaningful in any way if, you wanted to do actual 90 degrees if it's straight up, 0 degrees if it's flat. The only way to do that is to merge the ticks per bar with average range. So that's what we did here. You can use ticks per bar, but then it's going to be different on every single time frame and every single instrument. Or you can use average range percent per bar, which is pretty similar across all the time frames. Just to show you. This is much nicer now. You can do the channels, the median lines, the shift median lines all at once if you want, or individually. We're going to have some kind of method for switching between them as well. Well, we're going to have hotkeys for all this stuff too. So we'll either have a hotkey or something similar. So it does approach 0 when it's flat, but it's not 90% when it's straight up. I mean, we can't do that. It's not possible to get it like that. But you can see it goes exponential parabolic when it gets above about 65 or so, about 60. And then by the time you get vertical, it's, in the hundreds. So that inside of the market geometry reader, it's incredible. I mean, I've got most of the design down, but there'll be options for maximum slope and minimum slope so that you're not going to read, if you accidentally draw, a line on some chart that's like this or something, you can put a max of, say, 30%. Don't access any trend channel, median line, blah, blah, blah. That's over 30%. And don't, depending on which area you're defining, whether it be for the width trend area that you're trading or the counter trend area that you're trading for locking in a correction, you can put a minimum of, say, for the width trend, maybe you put a minimum of 6 or 5. And downslope is negative. Yes, absolutely. So that's what you were wanting, right? That's what I've been wanting to actually, to be able to lock that in inside of the reader, to be able to define that inside of the reader. So yeah, we've put a lot of user feedback into this. And we're going to do that. We're going to do something with the Elliott Wave buttons. You see how this makes the toolbar just massive. all these Elliott wave buttons. So what we'll be able to do is, using the middle mouse wheel or a hotkey, once you start drawing the Elliott wave, you'll be able to switch to the larger or smaller, cycle, primary, intermediate, minor, minuet, subminuet. You'll be able to cycle through all of these, and then once you get the one that you want and the color that you want, then you just click and apply. But you'll be able to do both ways. You'll still be able to keep these buttons like they are, or you could just have one button black, one button blue, and then you've gotten rid of 20 buttons right there, and that makes this toolbar so much smaller. The volume profile is almost done. It's just incredible programming. We wanted to make it to where it's as fast as possible. Volume profile, order flow, anything volume related on a tick-by-tick basis, it just bogs Ninja down. So we did a hybrid system where we're accessing Ninja's tick file, which is instantaneous. I mean, it's, you're accessing the database, it's super fast. And then for the incoming ticks, or the ticks of the recent hour, because Ninja saves the tick files in hour blocks, we create our own hybrid database type thing. But it's not like Gomi has the database that saves the bid ask data. This is just a super simple kind of internal thing that's not creating files that you then would want to access or load or do anything with. It's just kind of doing it for the purpose of having this profile work in a way that's as efficient as possible. So this is without a doubt the most advanced profile for Ninja, and we can draw these live updating profiles on any chart, any workspace, any time frame, any whatever, using one instance of the toolbar. So the toolbar is not really an indicator, it's its own kind of application. It's like an add-on which uses NinjaTrader as a canvas, basically. And then this volume profile is like a hybrid. It's almost like its own independent kind of a thing as well. And then we can access all of the levels from the profile from within the reader as well. You see the updating value area, the updating point of control. You could do VWAPs, running VWAP, and you can access all of these areas from within Bloodhound or Blackbird from any chart without having to load any of that into Bloodhound. So you're not having to load a profile into Bloodhound, which immediately, almost renders Ninja just completely impotent. It just has a really hard time loading profiles and anything to do with order flow or stuff like that inside of Bloodhound or Blackbird. Yep, all this before June 22nd, by June 22nd. When will the recording be available for the current? It's up right now. We're live streaming this right here. Live streaming it to YouTube. So here is the link. If you want to access it, I would load the link and then wait a little while and scroll back in time. Oh, actually, it looks like it's pretty high quality now. Before it used to look a little fuzzy or something, but I think it's looking pretty good. Yeah, I hear you, Steve. I like a small stop too. That's really what this is all about, is trying to pinpoint, the precise area where the market is likely to reverse, like the area that it's at right now, for instance. 90 to 51.10, I would say probably break 51, maybe head up to 51.10 or 15, put that high in crude. And then I'll likely get out of my final contract when we hit this trend line here at 55. 27 in the NASDAQ. You know, if that happens, which I sure hope it does. So the profile has to download the data if it's missing. We'll have some messages and all kinds of stuff like the old one had. But it's like its own drawing object now. It's not a drawing object. It's, well, it's not like the old one that's using Ninja's drawing system. This is using the custom drawing methods. These buttons look pretty ugly. I'm going to change them, make them look a little nicer, but it's got pretty cool little controls here. You just kind of drag that a little bit. See how you just kind of click in there and drag it. And it will increase or decrease the profile. Pretty awesome. There's a lot of features to this. I'm not going to, some of them are disabled right now, but yeah, there's still some bugs in it too. But it has to download and access the data once, so sometimes it takes 2 or 3 seconds. But then if you create a new one, it's pretty quick. So still some testing to do with that and some bugs and, you know, visualization stuff. The amount of time that's gone into this toolbar is just insane. It's crazy. And then we'll have a screenshot to hip chat button. There's alerts that do screenshots. You know, we can apply alerts to any line. It'll do a screenshot and email it to you. Email you the screenshot. It's endless. And then we have our own ruler now, which is much nicer than Ninja's, which does, we're probably going to add a couple more things, but it does total volume, average volume per bar, time, ticks per bar, all that. Still a couple of bugs with that need to be worked out. And then the copy tool, which is really nice. So we can copy to all subsequently faster charts. This is really cool. We're going to make all sorts of different options for this copy. But let's say I just want to copy this channel over to my 60-minute chart. I just select it and copy. And there it is with the alert. We probably need to disable that actually, but just an endless number of options with this thing. But we're going to make a different source as well, to where you just kind of click the copy button, then click the chart, and it will copy all of the objects to the subsequently smaller charts or the chart that you select, the clicked chart. So, you know, that's what we're about, is making trading and market analysis, good analysis, as fast and easy as possible, saving as much time as possible, because, you know, doing market geometry, volume analysis, all of this stuff that we're doing is pretty intensive. It's pretty intensive on the mind. I mean, it's not just intensive on a click by click basis, but it's also, you know, pretty thought intensive. So we have to make that as efficient as possible, save as much time as possible, save as many clicks as possible. And that's what this is all about. And then once, you know, able to combine this with Blackbird, it's going to be pretty nice. See, I don't think there's enough days back to build this one properly. So it's missing the auto line, it looks like. So still a couple of bugs with the copy thing to work out, but all these bugs should be cleared up by the middle of June. So JTrader is asking, what is the advantage of using non-back adjusted data on the charts? I think it provides more accurate areas. as far as I can tell through the testing that I've done. So it's most important for the highest time frames, the largest time frames, like the 240-minute charts and the daily and weekly charts, that you're drawing the market geometry in across contracts, so that for the weekly chart, these are the truly traded prices. And you see how the areas come in. So if I had this back adjusted, every contract gets merged together without the gap, so that all the previous contracts are not showing the truly traded prices. So for instance, in crude oil, you look at a daily chart of crude oil, this low is at 2605, and this high, this is the true high, that's the low that was actually traded that day. This high is 112. If I look at a back adjusted merged contract, it's going to show me different prices. Why do I not have that? I have it for every other workspace but this one. All right, well, let's look at a different workspace then. So let's look at gold. Bear with me for a second. All right, here we go. So this is back adjusted on the right, non-back adjusted on the left. That low is at 1045. That's the true low that's traded. This one's at 1054. It's not a huge variance when you're talking about just a few contracts, but when you're talking about several years, there's a drastic difference. And I think the truly traded prices give the best areas in the market geometry. I do use both though, so, but I favor the areas from the non-back adjusted. So then, you know, your slope, let's see what the actual slope is. Now that we have slope, 1.84. You see, I think that should be a little higher. But no, it just depends on how many bars you have on the chart. So anyway, 1.84 there on the non-back adjusted. Oh, it's the same here. Oh, never mind. Sorry. It would be the same because it's the same. The bar, the ranges of the bars are all going to be the same. Okay. It's just where those bars start and then where the gaps are in the contracts. So this slope is defined by the average range. So looking at the number of ticks per bar of the rise of this line relative to the average range per bar. Okay, so they would be the same. So that's a bad, you know, a bad way to test this. Does that make sense to you though? The back adjusted gets rid of that rollover gap. Okay. You have to go and test it for yourself to see the difference in the areas that are provided. And I think from what I can tell from the testing that I've done, the areas on the non-back adjusted seem to be a little better, and they are quite different. So it's not just, you know, small differences. Sometimes the differences are pretty drastic. For instance, here, and this is why I use both, that same median line. All right, this is probably a pretty good example. That same median line, I'm drawing to the same exact high here, to the same exact high here on the back adjusted on the left, sorry, non-back adjusted on the left, back adjusted on the right. That downsloping median line, this is kind of a good confirming indication here. The center median line is aligned with this high. See, that's before the second click, so it's not happening after the fact. It's just kind of a way of confirming which one is more valid. It's on that little swing high as well. It didn't quite come down to the low here. So maybe this is the one that's operative. Maybe this is the working slope here. So we didn't come to, gold didn't come back to this downsloping upper median line here, but it did on the back adjusted. See, it's about 2 ticks off of that high. So maybe for the moment, gold is using this back adjusted, the slope of this back adjusted line. So again, that's why I use both, but from the areas that I've seen, the trades that I've taken, the charts that I've marked up, the non-back adjusted seems to provide better areas more consistently, consecutively. Am I reducing the mean time to conclusion? I don't know what you mean, Samir. Reducing the mean time to conclusion. I don't know. What was that about? Oh, yeah, right. You so smart, Samir. Where's that from? It's got to be some kind of time metrics. The guy that did the was that the guy that did the count, the timing, the guy that kind of revolutionized the assembly lines? What was his name? We had to study all that in business school. Counting steps, basically. So that's what I'm trying to do with this, is eliminate as many steps as possible. Yeah, exactly. Yep, that's what it's all about. So, I mean, if we can do this type of analysis faster, we can watch more markets. That's the only possible way I'm able to watch 4 markets. If I didn't have these tools, then, you know, maybe 2. Yeah, probably 2. So I'm able to do twice as much, which, believe me, that's a lot. And then here, so we probably have one, we may have 2 or 3 rollovers in here. So on the back non-back adjusted, I'm connecting low to the low, the lowest low right here. That comes into the tick right here at this low, the low that I bought. But on the back adjusted, this is what I mean. This is why I use both areas, both styles of chart. When I connect to that lowest low, like I did exactly on the other one, we don't touch it. You see that? So that's the difference between the back adjusted and non-back adjusted. And that's why one good example of why I prefer non-back adjusted. Okay, so in order to get that low on the trend line, I've got to drag this one up to the higher low there, and then it's to the tick. But over here on the non-back adjusted, you see I'm connecting to the lowest possible low there. And then it's coming in perfectly. So I tend to see more of these perfect hits on the non-back adjusted to answer your question. That was a long way to answer your question, but I did it. So, all right, I'm going to go ahead and end it, guys. This is over 2 hours. I typically just want to show, you know, the analysis, get all the time frames, the higher time frames marked up for next week, but we are kind of in the middle of doing some pretty serious updates, and I know a lot of you have questions, so these will typically be less than an hour. Hopefully in the future, less than half an hour, around half an hour. Maybe we'll have some kind of introduction video so I don't have to do the same introduction every time we start. All right, you're welcome, Jordy. Everybody have a great weekend. You're welcome, Miss Ava. Yep, you're welcome, Samir. All right, everybody have a great weekend, and I'll talk to you guys in the trading room on Monday. So hope you guys have a good week next week. Yep, you're welcome, Colin, Larry. All right, everybody have a great weekend. I'll talk to you guys in the trading room on Monday, and then everybody else again next Friday. All right, bye.